Hello, happy Monday. Welcome back to my channel. Thank you for joining me on another Monday Market Update. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona, and always going through everything related to Phoenix real estate on Mondays. So with that said, let's get into it. We had some information coming out last week related to CPI, and we're going to start there so we can talk about what's going on in the overall economy. And I want to focus today on a potential U-turn and if you're a seller, should you be selling now? So we're going to talk about that shortly, but let's start with CPI. So last Thursday, the consumer price index came out, prices fell 0.1% in December, and that was in line with expectations with economists. And so this is good news. It means that the markets didn't react too much. It didn't change our mortgage rates all that much. And so it was all good. It came in as expected. Overall, inflation declined 0.1% year over year, declined from 7.1% to 6.5%. Excluding food and energy, core CPI rose 0.3%, which was also in line with estimates. The biggest reason for the easing in inflation came from a sharp drop in gasoline prices, which are now lower on a year-over-year basis. So overall, I would say this is a good CPI reading. As I said, it was where they expected, and that's always good news. Following the CPI report, market pricing pointed toward an increased probability that the Fed would approve a 25 basis point rate increase on February 1st. So that's also what's been anticipated. So the CPI reading didn't really change the course of where we believe we're headed with the next Fed meeting. So all good news. So of course, everything that happens with inflation is affecting mortgage rates, and where we're at with mortgage rates is a really good place. And this is also going to make more sense as we talk more about what's been going on with the real estate market. Mortgage rates approaching a 4-month low. This is from the previous week. We actually did make it to that 4-month low last week. Rates dropped to about 6.33% on average from the 6.48% the week before. And that is from my sources in the mortgage industry. Of course, all of these things depend on your qualifications and a variety of factors to get that exact rate, but just generally, the trend has been going down, and this is actually the lowest that we've seen since in the last four months. I believe this is saying that if we looked back, we wouldn't see rates as low as this unless you go back to September 12th. So that's really good news. We're starting to see those rates come down, which makes things more affordable for buyers. So as a buyer, it gives you a great opportunity to get a better monthly payment as prices have also come down. And it's also great news for sellers because that means we're going to start to see more activity on your listings out there. So this is good news for everyone, in my opinion, more affordability and more people able to sell their homes. So what I'm hearing from the folks in the mortgage industry, just, nothing set in stone, not really a true prediction of any sort, but just kind of the buzz is that rates might hit 5% by the end of Q1. Not sure if that will happen, but that is what a lot of people are kind of thinking we may be trending towards. And so if that happens, that would be definitely a change to what's going on in the real estate market right now. That would certainly spur more buyer activity. That would get more transaction volume, more listings under contract, and probably affect pricing and definitely not have as much downward pressure on pricing. Depending on the activity, it would possibly put prices in the upward direction, but we're getting too far ahead of ourselves. So we'll just wait on that prediction. Let's see where rates go. But let's talk about these Phoenix numbers and whether or not you want to sell now or wait. What is going on right now? It seems like we're making a U-turn, possibly from the direction we've been going. So I'm going to get into all of that data. But first, if this is helpful, give me a like and hit subscribe so you can be here with us every week. So if you're new, the chronology Cromford report is a report that I follow. They have this thing called the Cromford Market Index, which is super helpful. It helps us understand the supply and demand in our market. And when you can see that, you can determine whether or not we're going in a direction favorable for sellers or favorable for buyers, and therefore where prices are going to trend based on that pressure either way. So their numbers are anything between 90 to 110 in this reading is a balanced market, 110 and above is a seller's market, and 90 and below is a buyer's market. And so we look at this every single week. And this week we're at 107.2, which is the highest we've been at in quite a while. Again, anything above 110 is a seller's market. So at 107.2, we are pushing towards that seller's market again. Now, not a strong one, mind you, but we are firmly in a balanced market for all of Phoenix Metro. And one of these things that is different from last week and the past few weeks, as I've been looking at this and sharing with you guys, is that our supply has definitely broken off from the demand index. So we've been seeing supply and demand pretty closely tied together, both around that 71, 72 range. And now supply has fallen below demand at 68.6. And that is what has forced this market index to go up. So with 100 being normal, we're saying that demand is about 27% below normal roughly, and supply is sitting about 32% below normal. So right now we're seeing a lack of supply and demand that is still below normal, but has remained kind of stable. So that's where we stand with the CMI. Again, this is all Phoenix Metro. And so from there, we can break it down by major city. They're only able to do it for the 17 major cities that have enough data to provide the CMI information. So that's why I don't have every city out there, but let's look where we're at this week. We are finally at a week with all green arrows. I've not seen this. I'd have to go back and look, but we haven't seen this probably since June. Maybe, I don't know, somewhere between May and July was the last time we saw this. And last week, Goodyear was our one holdout with a red arrow, and this week it is green. So it finally got the memo of the direction that we're going here. And so this is another week where we see the overall market has moved strongly in favor of sellers. The average change to the CMI is 22%. Last week, it was 21%. And we're looking at the monthly change there. So last week, when we looked at month over month, it was 21% increase on average. This week, it is a 22% increase on average. So that has been gaining ground. The 21 to 22 is much less than we've seen over the last few weeks. I think the week prior, we were like at 16%, then we jumped to 21. So this is a smaller increase, but still showing the direction of where we're going. I wanted to read directly from the Cromford report what they say about the CMI. They're saying, remember that the CMI is the earliest of leading indicators. It tends to go down before most people expect it to, and it tends to go back up before people think it should. It can be up to a month before other market indicators follow suit. For example, last year it peaked on February 7th and then started to weaken. So if you remember following the market last year, the CMI peaked on February 7th, but we didn't really start talking about or feeling any major changes in the market until May-ish, maybe late April, depending on where you were at and if you had a house listed and that kind of thing. So that is an interesting thing to apply here because I'm not fully sold that this is where we're heading, but it has been proven in the past that it moves in a particular direction way before anyone expects, and that's kind of where we're headed. So there's certainly a chance that this could change. And one of those main factors is, well, two of those main factors, interest rates and our inventory. And right now, supply is keeping this low, and the positive news in the mortgage space is also keeping this low, as we've started to see some relief on those rates. So it'll be interesting to see where things head, but those are the two things that I suggest for you to follow is interest rates and inventory, and that'll help us determine where things are headed. So there's another indicator that the Cromford report uses, and it's called the contract ratio. And I've showed this in the past, not quite as often. This is not adjusted for seasonality or anything like that. It's a little bit more raw. And what it compares is the number of listings on the market available for sale compared to how many of those listings are actually under contract. So it's a ratio, the contract ratio. And they have a little guide here on which numbers hit certain levels. So they've got their cool, warm, hot, frenzy, etc. We have been pretty low here in the low 30s and jumped up to 37.2 on the contract ratio, which is bringing us out of this low section that we've been in for months. And so again, this is another indicator that things are changing enough to impact the contract ratio and the CMI. The Cromford report's saying it's risen from 33.5 on January 1st to 36.9 on January 11th. Obviously, we're looking at it today at 37.2. Those are small numbers compared to 12 months ago, because at that point we were at like 162. And we increased from 162 to 172 around the same time last year. However, although those numbers were bigger, that was only a 6% increase. And this increase from the 33 to 37 is about a 10% increase. So the point that they're making is that even though these numbers are small, we're seeing bigger gains in the same period of time. All of this on the much weaker side, of course, but it's making a bigger gain towards strengthening than it was this time last year. So that's another thing to watch. This is very reactive because it does show the active listings, and as they go under contract weekly, this ratio is changing, but it's another good thing for us to keep our eye on. They're saying that if it continues to improve at a decent rate, we should eventually see sales volumes start to recover as well. So that's just the number of transactions there are out there. But if this ratio remains below 40, we'll continue to see volumes kind of where they're at. So that's another indication if you're in the industry, whether it's mortgage, title, anything like that, you are definitely keyed into the transaction volume because that's what supports your business. So those are things to keep an eye on. If we go above 40, you may start to have a little bit more business out there. All right, so all of this talk about inventory, let's talk about the active listings on the market. This is going down, you guys. And this was typical because we were in November, December, of course, but here we are in January now. We're not seeing very many new listings at all. We're at 17,000-ish at the moment. And let me take this off here. And so the expectation was that this would start to trend upward as we get into the new year. And I know we're only 16 days into January, but this is still trending down. Now, of course, it's much higher than we were last year at this time. Much, much higher. This gives you some perspective on why we were in such a frenzy last year, because there were no listings available for anyone. But we're, going down. So we're going to keep an eye on active listings. Another way to look at this is the number of active listings here that we've gotten throughout January so far. So we're sitting at this 2,496, and this is comparing every January over the last few years back to 2007. Halfway through the month, it looks like we're kind of on the low end here, but we'll see where we go. Obviously, the last few years are not the best to compare it to because we had very low inventory. But if you're looking back to like 2019, 2018, we had in the 4,600 range, 4,500, 4,600, 4,700. So we may be on track to more of like this time when we were in a stronger seller's market or a weaker seller's market, but we have a ways to go. So anyway, this just helps us track where we stand this January so far in terms of new listings and what kind of the average was in the past. So this all begs the question, should you sell now or should you wait? Well, it's a really good question. I would keep a very close eye on inventory and interest rates. If you list right now, obviously we are on an upward trend, which is great, but things could possibly get better if we don't have a whole lot of sellers listing and we do have rates start to subside, especially because we are getting into our busier time frame where snowbirds come out. People start to have an interest in buying a property out here for a second home. A lot of things happen in the spring here, so our March and April timeframes are the busiest. So if you are considering selling, I don't have a direct answer for you, but the opposite could be true. If you don't sell now, things could just get worse and you could be looking at a lower price come April. I don't have my crystal ball, so I can't tell you, but that is the data. So hopefully that helps you make an educated decision. And if you want to know what your home value is in an instant, check the description below. I have a link to check your instant home valuation. I also have a link to search my MLS for all you buyers out there that want to take a look at that. So look in the description, reach out to me if you have any questions in particular. All my contact info is there below. And don't forget to subscribe so we can see you next week. Thanks so much for coming along, you guys. I'm Caitlin McKeag with the Desert Dreamers team.